Hello everybody, Danny and Research here, and today we're back with yet another video. So what I wanted to show you guys today is what are we expecting for the week right now, since the third quarter just ended yesterday, and now we are the 1st of October, the start of Q4, and we have some big data coming this week, okay? Just today we have the JOLTS job openings and the manufacturing PMI coming out. So as I've guys told you before, the thing is, the JOLTS job openings is a very important data set because the employers start slowing down and hiring before they start firing in recessions, right? So first they slow down the hiring before they actually cut people off. So it's very important to watch this number. Also today we've had a bunch of European data, very weak data, and very interesting. As I've guys told you before, I was saying that the euro has to go down. I was very bullish dollar, even though people were saying dollar is finished, like start cutting rates. But then again, if you look at the European Union, they're they're worse. Okay, so there's a very simple chart. It's not even like a tradable idea here. Of course, you could have traded this on the break, but then again, it just goes on to show you that first. All right, let's start like this. This is the monthly chart. So what we did, we took out the last month's high. After we took the last month's high, this was a tradable idea, and downside it was expected. And then we have this channel here that we broke to the downside today. Big support trend line right here, targeting this low, which was already taken just an hour ago. Then this low, and ultimately this level right here. Of course, this all depends on the data that's gonna come out this week. But let me just show you something even more interesting, because a lot of people are saying, um, everybody is bearish. People are doomers and stuff, and they're saying people are still bearish, right? People are still calling for recession. Nobody's bullish. Well, look at this, and let's dive deep into this. The fear and greed index is like right on the verge of extreme greed, as you can see right here. So let's dive deep into the components. Market momentum, extreme greed, okay? Stock price trend, extreme greed. Breadth, extreme greed. And this is put and call options. This is the most important thing in my view right now. The put to call options right now is at a 0.65. So essentially more than half of the people are actually buying calls. So, and quite a lot more than half of them actually. So the lowest that we've been in the past year was right here, July 10th, 0.61. Compare that to now, 0.65. What happened in July 10th? Let's quickly take a look. Do you see this? You see this? July 10th. Let me just zoom in a bit more. Right here. This is July 10th, okay? This was the time that we had similar put to call ratio that we do now. What happened after that? Boom. All right? So quite a big drop, and when someone tells you, oh no, there's so much money on the sidelines, sure, there might be, but then again, the sentiment is clear, and you can see this. This is the purest data you can see, right? Okay. Oh yeah, also yesterday we had Powell talking. It was quite a shocker for the markets. During his talk, markets actually dumped quite significantly right here. And this was because he actually said he was not confident. When he was asked if the cut actually uh, helps him to be more confident in a soft landing, what he said is he pretty much went silent for like 10 seconds before he said, it makes us more confident on inflation. Do you understand what that means? Well, it means that he's not confident in a soft landing. And he also said that the GDP is not a good predictor of a downturn. And the GDP of the US has actually been on a steady up move, right? It's not an up move, but it's like in the upper quadrant, right? So it's not a declining. He said that the labor market, the labor data, is much more important in predicting recessions than the GDP. But then again, after the dump, as you know, they had to trap everybody in. They had to trap the retailers, make everybody think it's gonna go up forever, kill all bears that are left. You can refer to this. Every push down is caused by people capitulating on their shorts. And when we see an up close like the one we saw yesterday on the SPY, above this pivotal level, this was a pivotal level, and this is actually very bullish, right? We close above this very important level, right? While it is technically bullish, why did we do that? Why did we close above? He didn't say anything positive, right? We are having big data sets this week. Big data sets, right? So it's not like we're clear to go, right? We still have those big data sets that are coming this week, right? Look at this. Today we have the JOLTS, as I said. Tomorrow, ADP, big stuff, right? ISM PMIs, unemployment claims, and then on Friday, the non-farm employment change. So it's all done to kill the bears. It's all done to make everybody bullish. And so far they have succeeded. I mean, look at this. Since we just ended the quarter, I was looking at the quarterly chart. So each candle here is 1 quarter. Look at this. Look at this move. This is the past 4 quarters. So this is 1 year essentially. Look at this. 35%. So everything is great. Everything is perfect. The economy is strong, right? That's what they want you to think. And even if you look at the logarithmic chart, you can make this triangle. So this is just for illustrative purposes right here. This is not something that I'm training on. I don't really trust patterns for trade ideas. Right? Look at this. So we closed the quarter above. Let me just do a little bit more like this. We closed the quarter above the level. Very bullish, right? But what if it's not, right? What if this is all done to make everybody bullish? I do believe this is the case. Of course, I hope I'm wrong, because nobody wants a recession, right? But the data is the data. And if you look at 2007, you can see the exact same thing happening. They making everybody bullish, a big rally. Look at this. If we go back to retest this support line right here, which is a big support line on the logarithmic chart, looking for 40% down move. And your up move is what? What will be your upside target? Next big psychological level is 6,000. So if this is your upside target, 3.8% from here, just do it like this. With the downside risk of 40%, what is more probable? What is the best risk to reward right here? Okay, and you have to ask yourself that, because yeah, sure, we can go up, and the technicals are suggesting that, right? We have broken out of many different technical levels today, but they know that the upside is limited, so they want you to think, yeah, sure, has to go up forever, right? And also there's this port strike looming in the US. It's estimated that the US gonna lose, like, I don't know what it was like 10 or 15 billion dollars. Actually, I think it was more per day from this strike. And they said that they're not gonna stop the strike until they get what they want. It's gonna be indefinitely until they get what they want. So you make your own decisions, guys. But if I were you, I'd be very cautious and looking at the data today, tomorrow, and the rest of the week. Very important data to set the trend. Are we having a recovery, right? Because right now we're seeing a bit of a downtrend. Are we gonna try to reverse the downtrend? If we do that, probably gonna see this. Okay. However, if we reinforce the downtrend of jobs, okay. Well, guys, thank you so much for watching. I'm gonna make another video after the data. Don't forget to like and subscribe. Really appreciate it. You help me stay motivated to make those videos, and hope you guys to see you in the next one.